Hello, everybody, and welcome to the ACWA Power Financial Results Conference Call for the 3-month period ending March 31st, 2025. My name is Sam, and I'll be your webinar operator today. All participant lines are currently muted. At the end of the prepared remarks, there'll be a question and answer session. If you wish to participate in the Q&A session, please use the raise hand button if you have joined via Zoom. If you have joined us on the phone today, please press star followed by 1 on your telephone keypad. And alternatively, Zoom users can submit a question in writing via the Q&A function on the Zoom toolbar. I'll now hand you over to your host, Oscar Serin, Head of Investor Relations at ACWA Power, to begin. So, Oscar, please go ahead.
Good morning, good afternoon, good evening, everyone, depending on wherever you're joining this call again. It's a pleasure to welcome you to the first earnings call of 2025 fiscal year, which, as Sam mentioned, is going to cover the first 3 months of this current year that we are in. Together with me, I have Marco, and I also have Abdulhamid, and we all three of us are going to be your hosts in this evening, afternoon, or the morning. Before we start, please let me remind once again that we will be or we may be using some forward-looking statements during the call, and obviously you will have to take them with a grain of caution within the framework of our disclaimer that is attached to this presentation. Once our prepared remarks are over, we will turn over to your questions and the answers session. And after that, we will close the call. And without further ado, I think Marco is starting. Marco, over to you, please.
Thank you, Oscar, and welcome everybody. If we can go to the first slide. I only have my usual few slides to give you the highlight of the momentum and the spirit, and then I will leave it to Abdulhamid to go into the details. What I would like to focus on is that, yes, we had very strong results, but just like I highlighted in previous quarters, our business must be looked in the long term, not so much on a quarterly basis, because we are continuing to develop a lot of projects. Sometimes we have cost ahead of the curve, and so the overall results might get somewhat, focusing on maybe the wrong metric. I think that the right metrics are really here. And if we look at the trajectory, I'm very pleased with the progress that the whole team in ACWA Power is delivering. So first, since I arrived 2 years ago, we have more than increased by 1.5 times the size of the company. We have passed the $100 billion marks, and we have substantially done in 2 years what the company did in the previous 10 combined. So I think that this shows to you that the momentum to get to the promise that we have made by 2030 to reach 250 billion is on track. And we are expanding with very selective growth in new countries to remain focused. With the signing of the acquisition of the NG asset, we are adding Kuwait, where we are also the low bidder for a new large plant. So we hope that this can be a new development. We continue the growth in China. So this is just the processing of the projects where we have already signed the agreement, basically, that we announced at the end of last year. And in Saudi Arabia, we're making so much progress. You cannot imagine, really, if you have not been here recently, the speed of the decarbonization program. By the end of the year, if we account what we have under construction today and what we expect will come under construction in this period, we will have about 30 gigawatts of renewables and more than 10 gigawatts of combined cycle under construction. So you see how this is massive, and it's unprecedented anywhere in the world other than China. And the last point is we're very pleased that NUR 3 resumed operation at the beginning of April. It's a complex project. It's a pioneer technology when it was installed. And so we're now pleased that this is back in operation. So if you can move to the next slide. The next point is that despite this massive growth, we're also improving on the undergoing operations. So on the safety track record, we have a lost time injury rate that is confirmed to what we experienced in the same quarter last year. So very low level. It's an industry benchmark. We're never satisfied. We have now an additional task force to really make sure that this is a sustainable performance and not just episodic. On availability and on power and water, we are confirming and actually improving on the water availability, the good numbers that we had already achieved last year. So I think that this is really a testament to the great activity that our team is delivering. But I would like also to add something on the cost efficiency, where you will see later that we had improvements because the costs are improving less than the top line, considering also the amount of cost ahead of the curve to deliver basically all the new projects that we're bringing to the portfolio. If you move to the next slide, here you have an overall view of basically the portfolio as it stands today. We have added already the NG assets, although, as you know, we're still between signing and closing. The activities are going ahead as planned. So I think that by the end of the year, we will have the full approvals that we need to incorporate these. We're now looking also at expanding the company in water desalination. As you know, we are low bidder in Azerbaijan. We're progressing in Senegal, and we're looking at other opportunities outside of the Gulf. We believe that this is going to be, a great new business for the decades to come. And of course, the great expertise is here in the Gulf, and the other countries need to be kind of work together in order to reach the decision to install plants in countries where historically they didn't have a need. But we see that with climate change, this is coming in many different areas. You saw in the video the new PPAs that we signed this year in Egypt and here in Saudi Arabia, and the water desalination here in Saudi Arabia. If you can move to the next slide. This is the last one of my section, and it is about the pipeline. As I mentioned, the PIF program is going ahead as planned and actually accelerating, and we have an additional number of bids or direct negotiations that we are ongoing. We are the low bidder in Morocco, if you remember. So some of these are expected to come in our hand in the remaining of the year. I think it will be a very interesting year for us. And so I would like to pass to Abdulhamid with these remarks, where I would like Abdulhamid maybe also to touch a little bit on something that is not on the slides, but I'm sure that you will have in your questions. That is about our view of the current volatility in the market, driven by the overall context, which is not impacting us, given our business model in the short term too much. But Abdulhamid, I leave it to you.
Okay, thank you very much, Marco, and good afternoon, everyone. Good evening. First of all, I would like to congratulate everyone on the great start of the year with the result of Q1 being announced this morning. It is definitely, as mentioned by Marco, easier to pass the message that, while we are not focused on a quarter to quarter, but more of a yearly performance for a company like ACWA Power, but it is always easier to pass such message in a great quarter such as this quarter. So on a year-to-year comparison, we have done fairly well with almost 44% increase in net income. If you also take out some of the one-offs, which is the adjusted net income, it's almost 5 times higher. What is important in our business model is we keep bringing assets to operation. So 3.2 gigawatt of assets have moved to operation this quarter. Obviously, you don't see immediately the impact of this, but it will take some time to get that impact. But most importantly for us is by bringing them to COD, you're taking out the construction risk. So that's big risk elimination, give us a lot of comfort as we move forward. As mentioned by Marco earlier, definitely Kuwait is a new country in 2 angles. One angle is that we are waiting for the result of Zur North 2, and the other angle is basically the acquisition of NG assets subject to the final approval of the other authorities. when you look at what we have been doing, we've been fairly managing our development engine very strongly. So almost close to 35 billion riyal of financial close achieved in the last 1 year plus 1 quarter, I would say. Maybe not significantly in the first quarter, which is usually slow. So if you look at this quarter and also last quarter, there hasn't much been activities on financial close. Yes, there was a few assets was closed last quarter, but ultimately this is a period of time that we work with the lenders, and we expect for 2025 to be also a strong year when it comes to financial closes, mainly coming in the quarter 3 of this year. So when you compare year on year, we are definitely confident that we will deliver something within the same range or higher for 2025 compared to 2024 in financial closes. The assets that are important, this is our first fleet of renewable coming from, first fleet of wind projects coming from Uzbekistan. This year, this Bash and Dasgandi 500 megawatt each comes actually slightly ahead of schedule with cost without cost increase, so with cost underrun basically. That's a good achievement for us. We get comfortable when we do things for the first time in a new country and you deliver remarkably. So my compliment to the team of execution for delivering these projects. ACWA, which is the largest today operating PV project in Saudi, 2 gigawatt now in construction with less than 18 months of execution. Big achievement by our execution team as well. With a small project, Layla also being brought to operation this quarter. So when it comes to moving asset to operation, we are also confident that the numbers that you have seen for the full year of 2025, 2024 will be beaten up by the result of 2025, inshallah. When you translate all this into figures, you will see the impact of development anchoring the quarter 1 results. So the operating income comes mainly with the great achievement of development and construction management service agreements. So these are basically the services that we are offering for projects that are under execution, or basically the project that we have achieved full completion in the development stage. So that's mainly the big impact coming from the operating income. And when you look at the contribution of the projects on construction, on operation, compared to the same quarter of last year, you'll see it slightly lower, mainly to one asset that are basically we are doing a decommissioning for it, which is a Shaiba IWPP. It's in the decommissioning stage that you have a one-off cost for decommissioning included in this number. Moving to the full year, when it comes full net income analysis. So aside from what has been presented earlier on the operating income, we would like to highlight the following difference and variance analysis for the same quarter of last year. The first one is item number 2, mainly related to the impairment loss that we have recorded last year for the outage of Noor 3, that we are not recording it this year. Yes, there is a small outage impairment losses we have recorded up to April. But aside from that, last year was significant, given that it is almost a full year impact of Noor 3 last year. Then you look at the item number 3 related to a discontinuation of a pre-hedges that we have, of a hedges instrument that we have booked last year. And we have at that time clearly stated it is a one-off, which is not expected to be repeated. And that adjustment of 347 is being recorded mainly for this one. Then you have item number 4 related to Project Dow in Africa. This is a project that we kept since quarter 3 of last year, trying our best to restate the project. By first quarter of this year, we, based on the continuous discussion with the off-taker, had made our final decision that this is a project that will not come online. So we have terminated the hedges related to it. And with the earlier writing off of the project development cost, we have closed this chapter completely. And now it is off our books. Finally, there is item number 4 related to the financial charges that was increased in quarter 1 of this year compared to last year, offset mainly by the credit we get in the deferred tax charges of this quarter. Here we are trying to show you the adjusted net income analysis. So there was two main items for this quarter. One is the small number related to the impairment of North 3, and the number was, as I mentioned, just the 6 to 7 million that we have recorded in quarter one for the remaining period of quarter one of impairment. Now the assets, alhamdulillah, is full in operation. Project Dow is the 92 million that I just highlighted earlier. So with that, the adjusted net income is around 525 million Saudi riyal. We have added this slide this time to show a trend, and as ACWA Power business model looks at a yearly performance, it was important to highlight since IPO how we have been doing both in the operating income and the net income analysis. So looking at this slide, you can see a strong year-on-year performance on the operating income side by around slightly less than 10% for the last 4 years. When it comes to the quarterly analysis, it's around 19%. Similarly, also in the net income, we have seen a very strong growth in the bottom line, which is around 32% since 2021. I believe it's an important message to pass here that despite the additional G&A costs that we are investing ahead of the curve, despite the challenging period during the COVID-19, despite the period of high interest rate movement, we've been able to stabilize our operation with our strong business model between develop, invest, operate, and optimize to deliver a very strong net income increase over the last 4 years. This is something that is giving us, or we are anchoring on this to even deliver it more as we continue to secure more projects, especially in this year and last year, where we had a significant pipeline of development, that we will see the value for it in the coming period of time. Before I pause for the Q&A, I think Marco has highlighted the tariff impact. So we have created a committee chaired by our CRO internally to look at the overall impact related to the tariffs, which is mainly the increase in tariffs in the US. In a let's say a first draft mode, we are fairly comfortable that the negative impact will not be more than 8 to 9% on what we are seeing in our net income figures. In fact, if you take different views or different scenarios, some scenarios could be positive for us, as we believe that the tariff increase for Chinese equipment into the US could possibly create more value for our procurement and supply chain when we deliver this project in our region. Ultimately, today it's a decision that's being changed on a daily basis, so we cannot give a firm opinion on that. But the analysis that we have done on the full supply chain, procurement, interest rate movement, give us the confidence or the comfort that the impact is not material for ACWA Power. We will continue to report, to review that assessment and report it in a quarterly basis to ensure that you have the full visibility on the tariff impact when it comes to ACWA Power position. Thank you, and maybe we open it for Q&A.
Thank you. If you would like to ask a question, please press the raise hand icon on your screen if you have joined via Zoom. If you have joined us on the phone today, please press star followed by 1 on your telephone keypad now. And alternatively, Zoom users can submit a question in writing via the Q&A function on Zoom. Please note, we will not be taking any questions from the media today. So if you are from the media, kindly refrain from asking any questions. Thank you. We'll take a brief pause to allow any questions to queue. Our first question comes from Ricardo Rezende from Morgan Stanley. Please unmute locally and proceed with your question.
Hello, thanks for taking my question. A couple of questions on my side. The first one, I'd just like to follow up on the hedging structure. What was the reason to close that structure now? If I'm not mistaken, on the fourth quarter call, you had mentioned that you would continue with this structure and could redeploy in some other projects. Then the second question, just following up on what Marco said on his remarks, when you look at the desalination prospects and when you compare with what you have pointed to on your investor day some time ago, would you say that things have been progressing better than what you had originally expected, and we could see a higher share of desalination projects within your portfolio? Then the third and final question, is there any updates on the rights offering and the timing? How's the process going with the regulator? Thank you.
Okay, thank you. So maybe I will take the first and third question. Maybe Marco will leave the second question later for you. So on the hedging instrument, you are absolutely right. In Q3 of last year, we have taken the full hit on the project Dow when it comes to overall exposure. Our overall exposure basically is two things, the development cost and basically a determination of the hedge. And you are absolutely right. At that time, we also said that while we are taking the full hit, we will keep the instrument for the coming period. And it was mainly to see if we can reinstate the project at that time, not to move it, even though that moving it to another project is also another possible route out of the hedge position. So we have waited for the last 4.5 to 5 months. And based on our review in February, we really believe that Dow is not coming back as a project. So we decided to terminate the hedge position because we were not able also to reallocate also to any other project, giving the negative value that it carried on this hedge. So that was taken out now. And most importantly for us is that we have cleaned and closed the book for this chapter once and forever. On the right issue, we are progressing fairly well. We get continuous engagement with the CMA. We get a lot of questions, feedback is answered. I do predict, and we have not yet get the CMA approval, but I do predict between Q2, Q3, we should be able to launch the capital raise. That's the view I'm seeing. Of course, it's all subject to CMA approval, subject to the EGM approval. But based on the analysis we have, that's the current estimate time, I would say.
So,
Marco?
Yeah, on the water desalination, the way I describe it is that, usually water is considered free. It comes from the sky or it comes out of wells. And so that means that a lot of public authorities take decisions to build desalination when it's too late. So after you have disruptions in operations and basically lack of water. And I always mention this anecdote. Last summer, I was in Sicily, and basically we ran out of water one day, and I had to order a big tank with a cubic meter that cost 60 euros, whereas we can produce 1 cubic meter of desalinated water at 60 cents. So basically cost 100 times more. That means if you do a desalination plant and you have a disruption of 3 days or 4 days in a year, you already paid for it. But the point is that politicians work in a different way, and basically they don't want to, add cost that they were not used to. The second anecdote that I make is that to produce 1 cubic meter today, it takes us about, 2.5 to 3 kilowatt hour per cubic meter, which is down from 15 or 18 many years ago, 15 years ago. So it's a big decrease. But the fact is that to pump the water from the mountains or the wells to a city on the coast, it's often, 1 to 2 kilowatt hour of power. So effectively, you're comparing capex with opex. Some of this is a sunk cost. So that's why politicians take a long time before they decide to do desalination. So what we have is that in the countries where it is needed, so in the Gulf, there's a big plan, there's a clear plan, it's going ahead, it's I would say, rather predictable, and we continue to be the number one, the leader in the industry here. In other countries, it's not just sufficient to be the leader and to propose something that is good. It's also a matter of convincing the local authorities to go ahead with the project. And that's what we're doing. We see that Senegal and Azerbaijan are taking a lead on this, and they're going ahead with decisiveness. We now have discussions on concrete projects in 6 other countries outside of the Gulf. So I'm positive that we will see in the coming years a maturation, and we hope that this can become a full realization of all the potential in the coming decade.
Thank you. That's super clear, Marco. If I may have a follow-up, how do you see competition for the geographies where you're looking at the desalination?
We have been actually one of the few players here, I would say. So there is competition always, but we hardly see more than a couple of players in each region. And that is why we believe that there's a great opportunity for us to capture a good market share.
Yeah,
okay.
Maybe if I can complement also, let's look at the recent project that we have bid for. No, so Ras Mahesen, it was awarded for ACWA Power. Then you have Jubail 4 and 6. We are waiting for the result, but we are also a very close competitor there. And then, as mentioned by Marco in Azerbaijan, we are, there was 2 big real consortium. We are the lowest there. Based on the current water and the landscape of the water, we've been able to secure most, if not all, the projects in the last 18 months of biddings. I think that's maybe an important reference point. And of course, Azure North 2, it's both water and power. And we were the single consortium that did a compliant bid there. So that's maybe the landscape in the last 18 months.
That is helpful. Thank you very much.
As a reminder, if you would like to ask a question and have joined via Zoom, please use the raise hand button on your toolbar, or alternatively submit a question in writing using the Q&A function on your toolbar. If you have joined us on the phone, please press star followed by 1 on your telephone keypad now. We'll just take a further brief pause to allow for any further questions to queue. And for a final reminder today, if you would like to ask a question and have joined on Zoom, please use the raise hand button or type your question into the Q&A box. If you have joined us on the phone, please press star followed by 1 on your telephone keypad. And there are no further questions today, so I'll hand back to Oscar Serin for closing remarks.
Thank you, Sam, and thank you everyone for joining us. But before I close, as usual, if you have any follow-on questions, please reach out to us, to the IR, Investor Relations, through email or through calls. And we will get back to you with all of these answers. And with this, I would like to close the call. Thank you, Marco and Abdulhamid, and thank you everyone behind the scenes from ACWA Power team. And good night, everyone.
Thank you, everyone. Take care. Have a good weekend.
This concludes today's webinar. Thank you all for joining. You may now disconnect.